My name is Bryan Betton and from Guardrisk Insurance in South Africa, and I'm representing Momentum Insure here in Namibia, one of our group companies. I'm sure everyone's pretty exhausted after the last 2 days of discussions and interactions. Truly has been an insightful and informative conference. Coming from South Africa, I arrived here on Tuesday not knowing much about the ongoing oil and gas projects here in Namibia. However, I do now feel much more enlightened, informed and excited about the future prospects of the industry and the country of Namibia. I'll probably be able to keep you busy for a while. However, considering the amount of time we have and the energy levels in the room, I'm going to briefly touch on a concept that is often left until last, but is crucial to the success of projects in the affected industries: the concept of insurance and risk management. Insurance is a very common topic, however, specialized insurance and structured solutions often isn't. Considering the size of the planned projects, I believe it is prudent for the entities that are planning to venture into the oil and gas industry to consider specialized solutions for their risk and insurance needs. There are fortunately specialized insurers and specialist expertise available to assist corporates with their structuring needs. The first topic that comes to mind when considering structured insurance solutions is the concept of alternative risk transfer. Loosely defined, alternative risk transfer, or ART, is where a corporate is able to get coverage for their risks outside of the traditional commercial insurance route. And by using risk financing vehicles, corporates are able to blend traditional insurance and reinsurance with a form of self-insurance, thus creating efficiencies in a risk management program and in a cost-efficient manner. In the context of the oil and gas industry in Namibia, these types of programs will be ideal to consider risks like future potential negative environmental rehabilitation risks that need to be provided for, as well as conventional coverage like the deductibles for their asset programs. Similarly, in the South African context, these types of programs are successfully used as a risk mitigation and management tool in the mining industry, where mine owners are able to fund their future liability for the environmental rehabilitation obligation to the Department of Mineral Resources over the life of mine, thus ensuring sufficient funds in the event of premature closure and for final closure. The tools that are used to facilitate an ART structure, specifically in the Namibian context, are the likes of a first-party self-captive or a contingency policy. I'm not going to go into the technicalities of a self-captive or contingency policy, but these tools give the benefit, or give the corporate the benefit of a number of items. These benefits are an off-balance sheet risk financing vehicle, a formal risk management and risk mitigation program, a structure which is proven to be financially sound in terms of accounting, tax, and the regulatory requirements, and also very important, access to foreign reinsurance markets where in-country capacity is limited or expensive. Capacity constraints is very common in the context of Southern African countries, considering the size of the capacity that will be required in light of the upstream, midstream and downstream requirements in the market. Capacity constraints and the cost thereof will be an issue. Entities will need to consider access to international reinsurance markets for capacity to be able to cover the risks associated with the oil and gas projects. By using a suitable tool, access can be gained to the appropriate foreign markets to get the necessary cover for the large limits which will be associated with these projects. Namibia Re, the local reinsurer, as per local Namibian regulations, will have to be a part of the process of seeking international capacity, as they have first right of refusal to the class of risks before going to the foreign market. It truly is an inclusive process. Ladies and gentlemen, going forward, I leave you with a few items that need to be considered. The oil and gas companies will need to consider making suitable financial provisions for any environmental rehabilitation risks that may occur during the lifetime of the project. The focus on local content will allow entities to partner and collaborate with local intermediaries, local insurers, and local reinsurers. By using the local content and the large amount of growth predicted in a number of different sectors, local entities will have to focus on relevant and sound risk management practices and consider the various risk mitigation tools available to them in the market. Due to the highly specialized nature of the oil and gas projects, entities will have to seek guidance and advice from competent and specialized intermediaries and insurers to advise on specialized, structured, and bespoke insurance programs. It truly is an exciting time ahead. Thank you for the opportunity to engage with you today, and I wish you all the best on this journey. Thank you.